I'm your host, Steffi Pilarinu, and today we are a wonderful trio. I have the best, as the French would say, le choix du roi, which means the choice of the king. That means a boy and a girl from the East and the West. So welcome, Theo, welcome, Richard. I do think that I have to introduce you because maybe some of our listeners don't know you. So I will start with Theo Lau, who is based in New York. She is top fintech influencer and a fresh author of a wonderful book with the title Beyond Good, and we'll be talking about that. And Richard Turrin, who has joined us from Shanghai, and he is another fintech personality and another fresh book, Cashless China. And I'm sure that we'll be talking about that too. The topic tonight is about financial inclusions and the principles of financial inclusion, and we have lots to cover. So both of you, welcome.
Thank you for having me.
Effie, it's so wonderful to be here with you and Theo, my two favorite people in the world.
Great. We are all ready to start. This idea of getting together started because Richard posted a wonderful recent report that the World Economic Forum put out about the shared or inclusive financial systems. And I'd like to start from there. Richard, do you want to touch on that? Because it's something that you took a deep dive into, and you can bring us your diverse experience from both the West and the East.
Sure, let's start off. And so the report is available free online for everybody. Google search World Economic Forum, and the title is Shared Principles for an Inclusive Financial System. And what the WEF basically says is that there are 7 basic principles for building a financial system that's inclusive. Now, my interest in this, of course, springs from my book, Cashless, where I talk about how digital payment transformed and brought financial inclusion to China. But so when I looked at the principles, what I saw is what I had just lived through in the Chinese experience. So without being too boring, though, let me just mention the principles 1 through 7 so that we get an idea where they are. And first of all, let's make the first point, which is not a principle, but the WEF is going fully digital. They their whole take on this is that digital and financial inclusion go together. So real quickly, principle 1, and these are all short and they'll make sense. Inclusive by design. Makes sense, right? Principle 2, integrated system. Principle 3, digitally led. And that's the whole concept of digital and inclusion go together. Principle 4, economically sustainable. And boy, that is a big one. Principle 5, informed by data. 6, trusted. Can't get enough of that. And 7, effectively regulated. And boy, the crypto guys are not going to be happy about that one, but still effectively regulated. So these are the 7 essential principles by the WEF for financial inclusion. And they're a good starting place to consider whether the systems that you're looking at are or are not inclusive.
You know, what's interesting to me from that report is that most of the examples that they're using come from Africa. And maybe we have the time to touch upon some of those cases that, are examples of combining maybe 2 or 3 of those principles because obviously to have the entire framework, we would have solved a lot of problems like poverty, which brings me to highlight two recent articles that I read this week. One wonderful reading from Lida Gliptis, where she is talking about how to achieve financial inclusion. And she's basically saying that we must tackle access to money for financial inclusion. And Theo, you too published an article this week about it's time to put our heart back into the ecosystem, which also talks about that. So tell us a little bit about your perspective, both from your recent article and from your book, as you hear these principles that Richard was just talking about.
Yeah, I love those principles for a few reasons. One is, as Richard said, they make sense, right? They're simple. And those are things that we should have had thought about to begin with. That should have had been the underlying way that we design systems, that we design solution. Unfortunately, as much as people like to say we have revolutionized financial services, I would question how much do we actually change, given that a lot of the solutions are still geared towards the same people who had access to financial services before. Now, strictly speaking, in the West, I know that there's a lot of things that's been going on that we are admiring that's happening in Asia and Southeast Asia. That said, the principles from WF that Richard shared reminds me a lot of the work that Flourish Ventures have been working on, which is where we got a lot of inspiration for our book, Beyond Good, as well as a lot of thoughts behind how we think the future of financial services should be. So Flourish, with Tillman and Sarah, they have come up with what they call the fair finance principles about 2 years ago. That was right when we started thinking about writing the book. And in there, they talked about, very similar to WEF, on how financial services should be, how the business model should be built on trust. It should empower people to achieve their life goals, right? That people should have meaningful control over their financial data and how it's being collected and how it's being used. And we know that that's been a struggle, right, with a lot of the startups. And Effie, we talk about that quite a bit. And finally, about the infrastructure needs to be open and it needs to drive competitive markets. And it needs to be digital native, just to your point. So how does all of that fit into financial inclusion? And why do we say that we need heart and we need empathy in doing what we do? In looking at a lot of the people that are being underserved, not just unbanked, but underbanked, right? Looking at the immigrants, looking at women, looking at older adults, looking at the needs of LGBTQ, a lot of their needs were not and have not been met by incumbent banks, right? A lot of the low-income households, for example, they're deemed unbankable. They're being forced to use alternative means to cash their checks, for example. And I would argue, and we would argue, that it's not because of lack of technology, it's lack of intention, it's lack of heart to actually serve those people that need those needs. Now, the good thing is we have seen a crop of new fintech startups out in the US and in the UK that are starting to address those, right? So there's Cheese that service Asian immigrants in the United States. Nina is starting with Bloom in the UK market to service the immigrant community. There is Daylight that service LGBTQ. But again, if you take a step back and look at the fintech funding party that's been going on this year, right? It's raining unicorn, it's raining money. How much are these startups, how much are these founders actually getting compared to the Revolut of the world, the Robinhood of the world?
How much has poverty, the bottom line of poverty or unemployment being impacted by all these decacorns? I guess now we're counting decacorns. This is when I look at the mission statements of most of these grown-up fintechs, I rarely see a spirit and an intention to change economic activity and empower economic activity. I guess Alibaba is a good example of, their mission being to enable anyone to do business anywhere, or Square saying that their mission is to be able to do business and thrive anywhere. Those types of statements show the intention, and I guess the execution too. But have we seen the change of the bottom line, especially in the US, in terms of poverty and economic empowerment?
I'd say the inequality gap has risen, right? And I wouldn't blame it squarely just on fintech startups. I think it's how we think about equity, right? And how we think about being more conscious to the society at large, and how we think about capitalism, right? The shareholder value versus stakeholder value. I think a lot of that needs to be revisited. If we looked back at even the last recession, a lot of people had not recovered. And we look back at what's been happening the past year and a half, the people that are impacted the most, they aren't the ones that are the wealthiest. In fact, the wealthy actually did pretty well. They got even wealthier. But, the frontline workers, the service workers, right? The so-called gig economy workers, where technology provided a means to work whenever you want and wherever you want, they are the ones who suffered the most, because at the end of the day is the tech guys and all of those that are making up with a good fortune, whereas, the people that are doing the food delivery services. So one of the reports that came out from Flourish actually last year, they look at gig economy as a whole in different regions around the world. They look at the gig workers in India, the ones in South America, the ones in US, ones in Indonesia. There were a couple other countries they compared. And their lives had not gotten better, even with the promise of technology, of being able to work whenever you want, wherever you work. I think we need to go back to the fundamentals. How are we treating these people? Are we giving them the tools to thrive? Are we helping them move up the economic ladder? Are we giving them the ability to reskill and upskill, right? We talk a lot about the state where we are in the US, where there are jobs, but they're not well-paid jobs. They're not good jobs that people want to do. So how do we bring and reskill that group of people so that they can be part of the future economy? I don't think we're doing a good enough job. And it's not just a private sector. It needs to be private and public. It needs to be policy driven. Everyone needs to have they need to be part of the rework and rebuild. And we're not there yet.
What is your experience on the reskilling front as it connects to the technology and the inclusion?
Okay, so actually on the reskilling front, I'm a zero, because that's the educational part, the financial literacy issue, and I admit that that's not my strong part. But the tech part, I'm good at. But I want to, forgive me, I want to go back to a couple of things that Theo said that I think are really, really key points. And the first of which is that, Theo, you were talking about the US experience a lot. And I think it's really critical to understand that when we talk about financial inclusion, it's not just developing countries in sub-Saharan Africa.
Yep.
That, those who live in the United States right now live in a country where 23% of the population is unbanked or underbanked. And underbanked is that classification that you mentioned where they have to go to check cashing and pay a tax, if you will, for to access financial services. So that concept that the US is included, I think, is key. And the other one that you touched on and a little bit, and I'm going to expand on it just a touch, is that inclusion doesn't just mean that you give people access to finance, because if you include financially illiterate people into a financial system that is preying upon them or stacked against them, what have you accomplished? And that's really, and a part of that, we can look at the experience in India and the experience in China, where really humble people who are financially illiterate get loans, and they get in debt traps because they don't understand the full ramifications of interest and what it means they have to pay back. So it's inclusion just doesn't mean connecting you to a system. Mm-hmm. Inclusion means connecting you to a system that has policy guidance so that these people do not become victims of a system. All right. And the third one, real briefly, I want to hit on, Theo, is you said something really interesting about immigrant banks. And this is a new trend that I think is really wonderful, specialized interest group banks, because I'm old enough to remember that my grandparents, they banked in the 1920s with Italian immigrant banks, and they understood what they were about. And they were very helpful to the Italian immigrant community at the time. So I think that's a great, like Back to the Future. I think that's a great all that is old is new again. And I think that's great. And I think these are all positive things. Sadly, Effie, as far as the educational point, it's really interesting because that's something that China is really trying to do, where they'll go out to really remote communities, and they have government programs to try to get people to understand that debt is not necessarily your friend. It can be good. Debt can do, small business loans and loans for people who've been shut out of the financial system, micro lending, whatever, is great. Nothing wrong with that. But again, it has to come with this educational component. And that's been a critical thing for the Chinese government to work on. And again, I see it with India, where people also have a lot of digital payment and a lot of digital debt that was problematic for them. The biggest thing right now in China, going back about 3 or 4 months, all of the big loan platforms run by WeChat and run by Alipay all reduced radically the loans that they're going to make to the 18 to 23 or 24 sector, the university and, post high school through university set, because they were getting terribly in debt. And many of them, I don't really think understood what debt meant.
Yeah, I agree. I remember even out here in the US, the first thing I saw when I walked into the campus on the first day of university was a desk with, the flag of the school and someone, pushing credit card. Hey, you want to sign up for the 0%, credit card with the logo of your school there. And of course, it's like, they're preying on youngsters coming into the campus and not knowing exactly the basic of how to manage your money, right? And all you see is the 0% for the first 6 months or whatever. It's like, oh, that makes sense. Okay. But the idea of debt, the idea of compounding interest and what it can do to your finances, they don't teach you that. They just say, hey, here you go, here's a card. And then we wonder why the youngsters end up with debts.
Yeah, it's really pretty. It's got the school logo. Why would you not want it, right?
Exactly.
And that's
valuable student refinancing businesses growing, and scaling, because of course, we created the problem and now we have to solve it and create, valuable quote businesses that are solving the problem that we initially created. It's quite interesting. I want to add to what you have said, that it seems to me that there's been this rush of technology, right, that we have brought to market and is flooding places to solve this problem of accessibility, of underbanked and so on. But nobody has taken care of minding the gap of how do we use these responsibly, and in general how we use it, and we're leaving more and more people behind because these technologies are quite intimidating for a certain part of the population. I was listening to a great podcast the other day by Michael Casey, and he was talking about the idea, the Aadhaar in India, and the fact that it's been left to the people to integrate to the system. And therefore, we've created a new group of excluded people, the people that have not been able to link to this digital ID system. And now they can't do any economic activity. They're excluded completely.
Yeah, I think M and Louis out in the UK, they have published recently a really fantastic article that I think everyone needs to read. Is about how to be more inclusive when it comes to designing digital solutions. We're not saying that, you shouldn't go a digital ID route. We're not saying that you shouldn't go digital, because there are a lot of benefits associated with it. But we don't think enough about what about the rest, right? Yeah, sure, you might have solved a problem for 90%, but what about the 10%? And what's the repercussions of it? Well, when you got to a point where, like you say, Effie, when their activities are severely hampered or limited, they can't do the basics. Just like when we think about digital banking, right? We say, well, we don't need branches anymore. Everyone's going to go digital. Well, what about the ones who cannot go digital? What about the ones who are living in the rural area? How are they going to do the basic things, right? The basic things of, cashing a check. Yes, we still use a lot of checks out here. What about, depositing money? All of those things, a lot of things that we take for granted. How do you go about doing all those with people with accessibility problem? There are just a lot of thoughts being put in. Let me rephrase this. Someone told me a while back, Jimmy, and I keep re-quoting him all the time because what he said was so true. People tend to solve problems that you're familiar with. So when you look at the people who design these solutions, you look at the people who come up with these solutions and things that they want to solve a problem for themselves or for their buddies, they're homogeneous. And so until at such point, you get the circle of funders and the circle of creators to be more diverse, again, we go back to DEI, it will be really hard for the fintech ecosystem to come up with solutions that serve more people, because everyone that come in, the people who get funded, the people who have the opportunity to think about creating a startup, the people who have the privilege of doing a startup, when they all look alike and think alike, this is what we're going to end up with.
Yeah,
I must admire, Richard, the design of the digital one, the fact that they thought, what will happen to the people that don't have the smartphones or can't use the smartphones? I leave it.
You read my mind. That's exactly where I was going. That's great, Effie. You read my book.
Exactly.
So look, that's really okay. So in my book, Cashless, which is about China's central bank digital currency. They've been working on it for 7 years. And one of the biggest issues two big issues they had to solve was, one, how to make central bank digital currency payment work without a signal. No cell phone signal. So you're in the mountains, you're a sheep herder, a rural community person in the mountains, and you want to use digital currency and you've got no signal. How do you make it work? And they found the technology to do that with a direct transfer through NFC, near field communication in the phone. Let's leave the tech out of it. But the next huge problem that they had to solve, and this is so different from the Bitcoin and crypto people who are like, look, we can make a coin overnight. Why is it taking China 7 years? Right? And the reason it's taken China 7 years is they have to design, and they came up with a brand new digital card that, again, requires no signal, no phone. Anybody can use it, right? And so the digital card actually, some of them have a thumbprint reader, some of the designs, it's all new, so it's not thoroughly in circulation yet. Some of them have a biometric thumbprint reader on them. Some of them have a little keypad, but you can basically use this card to tap and pay on another equipped terminal. But then, of course, you get into the question is, how do you load the cards? So then you have to retrofit ATM machines so that they can charge the cards. And if actually what nobody sees with the central bank digital currency is the list of patents that I have in my book, and there's I've only included a few of them, but, I include about 10 or 15 patents, and it's all about how to make this work for people who do not have a smartphone, and that's elderly people, rural people, the very, very poor. And, that's, a lot of their time went into thinking about how to make it work for everyone. And I wish to God more fintech solutions thought about that, because to me, I couldn't agree with you more, Theo. And I apologize if this sounds crude, but it's a bunch of white guy coders who are hanging around, and they're solving solutions for their peer group, and they're sort of not hitting the people who are left behind or may not be in their peer group. Let's just leave it at that. Okay.
And
so I couldn't agree with you more, Theo.
How many European startups have got brilliant ideas and are coding solutions for countries in Africa? And of course, they have no idea, what is the local culture, what can work and what cannot work. I mean, there's many of those.
I love that. That's that. Just real quickly, this is only a short one. Nothing makes me laugh more than when the fintech guys complain about China fintech. They've never been here. They've never seen China. They don't know what's going on, but still they've got a solution as to why China is doing it wrong, even though we're very successful here, So it's sort of, that's a real problem. You can't know unless you're in that person's shoes. You don't know what their needs are. And that's why the more people we get building this stuff, the more diverse our communities become. The better the solutions we can, pump out, and I think that's absolutely critical.
Yep, it goes back to lived experience, right? So if I look back at when I first started in fintech a few years ago, I was looking for solutions for older adults, and it took a while to find a few entrepreneurs that are working on it. But what was striking with that cohort of startups that I found was that all of the entrepreneurs had a personal story. They either went through caregiving experiences, taking care of their grandparents or their parents, or they lived with them and saw firsthand what they need. And that experience inspired them to create new solutions to address things that, were not in the market. And so it goes back to empathy. It goes back to, how are you thinking about approaching a problem when you're solving something that has already been solved, but you just want to put it on a pretty UX, or you're really trying to find a solution to help make the world better. And we need more of the latter.
Exactly.
I'm down with that. I love it. How do we get there?
We need more diverse VCs. We need more people who care, who can put money in. I think that is the bottom line. Money makes the world go round, right?
Yeah, and I would add the other one that you hit on earlier, which is policy. Mm-hmm. You see, look, I live in a country where policy is very clear and very strong, more now than ever, of course, with the crackdown on tech. So we get that. I'm sort of, look, I was an investment banker for 18 years, and I'm sort of reformed now in the sense that I see where without policy guiding some of the government policy, physically guiding this stuff, it's just not going to get done. And I think that that's, absolutely critical, whether it's, local government policy, NGOs with policy. I don't know where the policy has to come from. Obviously, local governments are the best starting place, but those policies have to be somehow put into place at some higher level, or else I fear that the private sector on its own just isn't going to arrive there.
Oh, the U.S. is a perfect example for that. Right?
Well, yeah. Look, 23% unbanked and banked, with what is arguably the highest number of banks. I'm sure maybe Singapore or Switzerland has more, but the very high number of branches per capita, a very high bank penetration rate for, numbers of banks in a community. However you dice it, they got great numbers, but still you got 23% who are un and underbanked. What's wrong?
We are also the only developed country with the highest rate of inequality in our society, right? And I mean, the numbers go on and on and on and on. We have so many people who are not digitally connected. We are so many people who cannot find a job. And it's just all trending in the wrong direction. So there's definitely needs more guardrail. There needs to be more policy guidance, and there needs to be more innovation in the right place. I think that's one of the big challenges. If you think about who does the innovation, right? Who comes up with the ideas? You need to go back to that. We used to have a lot more idea exchange between cultures. We used to be more open. We used to have more immigrants who are part of the innovation ecosystem. What went wrong? What happened there? Effie, do we need to log in again?
What
I just
happened?
noticed that you have less than 1 minute.
Yeah, but it's been saying that for a while. You froze time, Richard. What did you do?
Yes.
You
Richard-
managed to freeze time for me.
Don't blame me. It's not my fault.
No, you have superpowers. That's what
You
she
have
was
okay.
saying.
superpowers. What
Yes.
happened? think
I just saw
it's-
that.
Yeah, but it's been saying less than 1 minute. We are back after a brief break, a brief interruption, and we want to touch a bit on some specific examples of inclusive financial initiatives. I don't want to call them fintechs. I just want to think of inclusive financial initiatives of any sort, from wherever. And I bet you that all the examples are going to come from Latin America, Africa, Asia, and so on. But let's see. I'll leave it open. Maybe you can come up with something that is in that so-called developed world.
We do, but I'll let Richard go first.
Okay, who wants to go first? Or we can take turns.
I volunteer. Look, I'm going to start. I'm going to start going back to the WEF document. All right, and there are sort of the top three guiding principles are really simple. They are they're simple. They're digitally led, integrated system, and inclusive by design. And there are really two great systems that follow those three top rules perfectly. And they are M-Pesa in Kenya, which just today became Africa's biggest fintech platform with over 50 million monthly active users. And of course, in China, we've got Alipay. So let's take these three of these digital inclusive rules. So first of all, digital. Got it. M-Pesa and Alipay, both digital. And the next of these is integrated system. And now this is where M-Pesa and Alipay did a really great job. They were integrated very quickly in society because they were free and cheap to use, free and easy to use, okay? So Alipay, one of its great innovations was using QR codes and making it so that people who were not digitally connected could use a QR code to collect money. So if you're a guy with pushing a noodle trolley, right, or a noodle guy on the corner, with a little stand, right, he doesn't have telephone lines. He may or may not have a cell phone, but he's got that QR code. M-Pesa did the same thing. They got this integration with society by not even having a network. All you needed was a cell phone and cell phone signal. No data, no smartphone, nothing. All right. And the third thing was that they were inclusive by design, which I think I already discussed. But the point is, both of these systems, whether it's Alipay or whether it's M-Pesa, both made it so they could reach the bottom of society, not the top. Now, wait for it. An example of going for the top, 2014, the launch of Apple Pay. All phones, when Apple Pay launched in 2014, they also launched the iPhone 6. If you had an iPhone 5, 4, or lower, forget it. You couldn't use Apple Pay. In other words, Apple Pay was built on the pay-to-play model. It said if you don't have the latest phone or can't afford it, you can't use it. And it's one of the reasons, one, of course, credit cards is the other, one of the reasons why it took so long for Apple Pay to really catch on, because it was expensive for people to use. So again, making digital solutions for the bottom part of the population and building that inclusivity into the technology is what made both M-Pesa and Alipay so successful in their respective countries.
I'd say, Richard, add Grab to that list too, right? If you've seen, right, what they've been able to do in Southeast Asia is phenomenal. And it follows the footsteps of the big tech in China, where they're looking after the drivers, right, who are driving for them, because they started off as a transportation logistics company. And then they realized how a lot of their drivers did not have access to financial services. And so they created a whole slew of finance products for them, right? Grab Pay and then Grab Insure, and all of those to allow them to get insurance, to allow them to save, put their money, get their earnings. I mean, it's brilliant if you think about, how they've been able to change that whole region. Which is why I always say we need inspirational examples, look towards the East.
Yeah.
Right.
Yeah, that's really I have really great news tonight. I just got a letter to the editor accepted in the Financial Times, which is always nice.
Awesome.
And but really, and the closing line in the letter to the editor is that our digital future is made in Asia. Because when you really look at the innovations from the Grab, from China's Alipay and WeChat, and also what's going on in Singapore, Southeast Asia, you just see tremendous innovation. Now, I can't resist this one story. Grab and Alipay have one really funny story in common. Both of them went to local banks to try to get them to provide banking services to their company. So Grab needed banking services for its drivers. They went to the local banks. They were turned down. The parent of Alipay, went before Alipay existed. They went to the banks and said, "Hey, we need a bank that can help us with buying and selling online." The local banks turned them down. So both Grab and Alipay became these massive digital players, and all because the incumbents didn't want any of that business, which I find just amusing to no end.
They felt part of the excluded group, right? They felt to their bone what it means to be excluded.
Well,
yeah.
And I think they underestimated the market too, right? A lot of times incumbents, they look at gig workers, they look at, people that don't fit the normal model as not bankable. And they think they're doing a charity. And what they they fail to see is this is the trend, and there is a big market to be had. To serve the underserved doesn't mean that you're doing charity. To serve the unbanked doesn't mean that you are not making money, that you're philanthropy. There is a way to do well while doing good. There is a way to provide good products and services to a group of people who otherwise didn't have it, and that doesn't mean that you're doling out money. And that's the one thing I think people still don't get. Except there are a few, Effie, I did promise you an example in the US, and that's Sunrise Banks. And we featured them in our book. And we just love what David and team has done, because he bought the bank with his dad 25 years ago. And Sunrise Banks is a bank in the Midwest, in the United States, and they serviced immigrant communities. And when you think about, right, Richard, earlier we were talking about immigrant banking. We're talking about demographic of people that, are people that, a lot of these that they service are mid to low income people. And not only are they true to their saying, we're going to provide services to you, we're going to provide financial education to you. If you look at the demographic of their employee base, which is what I'm always very, very fascinated by. We talk about DEI, we talk about serving diverse population. We also talk about lived experience. The people that you have in the banks that are working in your organization need to be able to understand the needs of the people you're serving. And so over 58% of their employee base are women. 30% of them are ethnic minority. 30% of the employees also come from LMI communities, which is what we call the low to moderate income family, right? So when we think about diversity, it's not just about gender, not just about race, it's also demographics, it's also about background. If you come from those backgrounds of people, you know what it is that they need, that they're lacking, then you can use that know-how, use that lived experience, and use your empathy to create products that can help them. And that is always like one of my favorite example. They have been able to grow 10 times, right? So there's growth in there, and they have been able to provide services to them. And they're one of the B Corps, bank and a B Corp, which is fascinating. And they are one of the top 10 B Corp in the world for 7 consecutive years. So that says something. There is a path to be had. We can do it if we put our mind to it.
It also shows that, with technology, you can do many things at scale, right? And we have many examples. But at the end of the day, you need the people to deliver the experience with the technology. And that is even more important than it was before when we were less digital. This is the irony and the reality today. And I'm not sure that everybody, shares this. To me, this is the reality, that the people that are servicing either front or behind are even more important than before. Richard, do you agree?
Yeah, of course. But the question is, I couldn't agree more. The question is, how do we capture that in the digital systems that we build? So my thesis is that a lot of this, especially in the banking business, a lot of the customer service is going to go digital in the banking business, not all of it. But how do we capture that ethnicity, that diversity, so that we can make a digital interface that somehow captures the reality for the people who are using it. So I saw a mobile phone app for India market that was designed for illiterate farmers, and it was completely pictographic, so that they would not have to actually read anything on the phone so much as tap on the pictures to be able to make a payment or to transfer the money. So I think that's a really nice example of, well, how do you get there? And you have to make the digital work specific to the community that's using it. Okay, we do that in a sense that we make stuff with big letters for older people like me who can't see so well up close. but there's a lot of ways that we have to build that diversity into the interface, or at least into the interface in a way that acknowledges that not maybe everybody's going to use this front page. Maybe there's someplace else for them to go. I don't know how to do it, but we need to capture that.
We're at an early stage. Go ahead.
Yeah.
Sorry.
No, we're at early stage. And I think, Richard, that's also part of where policy comes into play, right? We talk about digital divide. We talk about millions of people who don't have access to digital. This is where I would hope that, just like governments build roads, right, for accessibility, we need to think about the digital infrastructure too. It's not a nice to have so that, the three of us can be here and chatting about the future. It's not a nice to have so that you can stream, I don't know, another Disney movie. It is a necessity. You need that to be part of the future of economy. You need that to improve economic inequality between classes of people. You need that to get students access to opportunities, to knowledge. And it needs to be part of every country's infrastructure. How can we go about creating opportunity for people? Well, you need to sell digital access.
Yeah, it's really interesting because in China, in this last year, well, a little less than a year because of COVID, but they had a big campaign in okay, so I live in a apartment compound, just like anybody, any place else. But my compound and maybe a couple of other buildings around here are part of a community group. And that community group, which is run by the local government, they have had sessions for the elderly to teach them how to use WeChat and Alipay. Because now that the digital RMB is coming out, which is pretty much like like WeChat and Alipay, there's this transitional generation that if they're trained, they can use it, no problem. But then nobody's ever taught them to. So the government took it upon itself to actually have training sessions for older people, and they get together in this community room, and they sit there and they teach them how to push the buttons. It's really it's good, but that's the policy part again.
Mm-hmm. Yeah, and if anything, we've learned in the last year and a half is that as long as you have the intention, right, you provide the tools, they can be part of that society. Look at PayPal last year, and I remember in the middle of the pandemic last year, one of the news reports that came out from them was the fastest growing demographic of people that's using PayPal products are people that are older than 50. And they were surprised. And we're like, wait, this is what we've been saying all along. They might not be digital natives, but a lot of them did create the technology we're riding on. And if you make it simple and easy enough, just like the iPhone, my kids can use it, so can older people. So we cannot just say, well, we don't design for older people. We need to take a step back and think about how can we design for a wider demographic of people so more people can be part of it.
It's really funny that you mentioned the PayPal experience, because I haven't thought about that in a while, but I fielded this question many years ago. The same thing with Alipay and WeChat Pay. People are like, well, it's for the young people. And I'm like, no, it's not. Here's the age group. And if you looked up the age demographics, this is already talking about 5 years ago, but still, if you looked at the, 50 to 65 or 55 to 70 group, I don't remember which, but it was much further skewed toward older people than many thought. People were like, "Oh, this is for young people." No. It was for everybody, and older people. Maybe they asked their kids for help, but they figured it out. And we're talking about 2017 and 18.
Mm-hmm.
But this is the same with social networks, right? A lot of the big social platforms, from Facebook and so on, they also started that way, and then they moved on, and the disruption goes on and on. I think there's a lot of similarities to that, and there's big questions of whether the big tech companies, the GAFAs, at least in the West, should share some of that responsibility of bringing up to speed people into the digital world, which includes, of course, financial services. So I don't know that they have really taken that upon them, except if it's for them to sell a product, rather than the intention of upskilling the world. But I think that we have to wrap up our session. And before we do that, I want you both to blow your trumpet about your books and connect it with the topic of financial inclusion. Where can people find your books? What are they about? And how it connects to financial inclusion? Ladies first.
Thank you. So our book came out recently, a few months ago. It's called Beyond Good. You can find it on beyondgoodbook.com or Amazon, Waterstones, and any big retailers near you, as well as your local bookstore. We love local bookstores, so please support local. And, you know, at the end of the day, technology is a means to an end. And that's what we believe in. And so use technology to do good, use technology just not for your own sake, but also there are goods in the world. And the book aims to bring out the voices of people from around the world who are doing great things, not just the ones who speak the loudest, but also ones that have good intention, good heart. And hopefully you can find inspiration and hope from the stories.
Great. Richard?
Cashless, China's digital currency revolution. Here's what I have: two messages. One, many may not think about it, but actually China is a blueprint for the digital transformation that's going to happen with money going cashless in the West. So if you want to know what the future has in store, look to China today. And don't think that it's too far away, or don't think that it's not relevant, because even though the company names are going to be different, how going cashless affected banking, how it affected asset management, personal finance, all of these different sectors, all of them in the West will eventually migrate, in many of them, in the same direction as they did in China. So the only book on China's central bank digital currency. So I cover WeChat, Alipay, and of course, a whole third of the book is devoted to the design and construction of China's new CBDC. Available on Amazon, Apple Books, Barnes & Noble. I have to read this, Kobo, Walmart online, OneDrive, Gardner's, Scribd, Libri, and Baker and Taylor. So that's the digital lowdown on where you can find cashless. And yes, you need to use some form of non-CBDC payment to buy the book, but that's only for now.
Can't buy with crypto, Richard?
Can't buy with crypto for now. Well, actually, sure. You hit me with a big number and I'll sell you a whole pile of books in Bitcoin. Look, I'm easy. No problem. I'll send them direct. I'll have them printed and shipped directly from China. Not a problem.
And on that note, thank you guys. It was wonderful having you. Richard, I guess you are in Shanghai today, and Theo, I guess you are in DC. Pardon for the error, saying New York, and I am in Greece. So
3 different time zones. I love it.
Yes, but we all wish we were in Greece with you, Effie.
Yes.
Well,
yes.
Next year we will converge in the middle. Let's hope that we can do that. Thank you very much for this wonderful conversation, and talk to you soon.
Thank you.
Thank you so much for having me, Effie.